Hi everyone, Kathleen Brooks here. I'm the Research Director at XTB London, and today we're going to be talking about what to expect in next week's spring budget. This is expected to be the last budget before the UK's general election. Usually a Chancellor will cut taxes in the run-up to an election. We expect Jeremy Hunt will add some pre-election sweeteners to try and win votes for the Tories. There could be one showpiece tax cut, maybe a cut to income tax or another cut to national insurance tax. But it's worth remembering the backdrop to this budget. National insurance was cut in the autumn statement, but tax rises are coming down the line, including an increase in corporation tax and freezing the income tax personal allowance and the higher tax rate thresholds. So he may want to try and ease the tax burden for individuals in this budget. And he said at the World Economic Forum in January that he wanted to cut taxes further. It's worth remembering that the Chancellor might give with one hand, but he takes away with another. The size of the tax cut that the Chancellor can give in this budget depends on the size of the fiscal headroom that's available. You'll hear a lot about his fiscal headroom around budget day. It's essentially the difference between the forecast levels of debt in 4 to 5 years' time and the level of debt that would breach the government's own fiscal rules. Estimates for the fiscal headroom available to the Chancellor is between 15 and 23 billion pounds, which is lower than the average level of nearly 30 billion since 2010. This shows how tight the UK's fiscal position is. We'll be watching for any changes to inheritance tax and changes to the tax-free savings allowance. Also, we could get a cut to fuel duty, which would make a significant dent in the fiscal headroom. The Chancellor could increase fiscal headroom by cutting public spending further, but this seems unlikely. The government may need to cover the NHS shortfall for the year to the tune of 700 million, and several local authorities have announced bankruptcy and may need bailing out. There aren't many options for public spending cuts in this budget, as government departments that aren't ring-fenced are already facing sharp spending cuts in the coming years. Overall, we expect the Chancellor to focus more on tax cuts rather than spending plans in this budget. There's a strong argument that this budget could end up being not worth the paper that it's written on. There'll be an election at some point this year, and right now Labour is leading in the polls, which means the UK could get a change of government. New governments usually have their own tax and spend agendas, so a new Chancellor could reverse any changes that Jeremy Hunt makes next week. The impact of budgets on financial markets can be difficult to gauge. Sometimes, like when Liz Truss was Prime Minister, budgets can cause massive amounts of financial market volatility. We definitely don't expect the same amount of volatility on the back of this budget. But we would note that there haven't been many leaks, so what the Chancellor announces could be a surprise for the market. This may cause a reaction in UK stocks, bonds and the pound. It's also worth noting that the Office for Budget Responsibility, the OBR, is also releasing their latest forecast for the UK economy alongside the budget. The OBR forecast could revise down its outlook for economic growth to bring it more in line with the Bank of England growth forecasts. They may also change their inflation forecasts, with prices rise lower for this year, but their medium-term forecasts could be revised higher. If this happens, then it could lead to some repricing of interest rate expectations, which may lead to volatility for bond markets and for the pound. Thanks for joining, and see you next time.